Most people who talk about huge returns are trying to sell you a course, a signal group, or a dream that doesn't really exist. I'm not doing any of that. I have nothing to sell you. I'm making this video because I spent years losing money following these gurus who couldn't trade their way out of a paper bag, and I wanted to save you those 3 years of pain I went through. I'm going to tell you something that the gurus hate. The more you trade, the less you make. I don't day trade, I don't use leverage, I don't touch options. I'm definitely not sitting in front of a computer all day. In fact, some of my best months have happened while I was on vacation and didn't check the market once. In this video, I'm going to show you the exact strategy I use to outperform the S&P 500 without the stress. We're talking about a mix of indestructible giants and future kings. I'm going to show you why having 30% of your money in cash is actually a professional move, and how to pick stocks that can 5x without you having to gamble your life savings on a 100x leverage bet. I have nothing to sell you, no courses, no inner circle. I just want to show you the math of how wealth is actually built. Most people quit their 9-to-5 jobs to become a trader, and all they really do is create a worse 9-to-5 for themselves. If you have to be at your desk at 9:30 a.m. till 5 p.m. every day to make money, you don't have an investment. You have a high-stress, low-benefit job. My strategy is built on asymmetry. I want maximum upside and the minimum amount of life force spent. We focus on swing trades and long-term holds. Why? Because the big money isn't made in the fluctuations, it's made in the movements. As Jesse Livermore, one of the greatest traders ever said, "It was never my thinking that made the big money, it was me sitting." We are going to learn how to sit. If you put all your money in Apple, you're safe, but you're not getting huge returns quickly. If you put all your money in the penny stock, biotech company for example, you might get huge returns or you might get zero. I like to use the barbell strategy. It has two sides. It has side A and B. Side A are the fortresses. That's your 60 to 70% of your portfolio. These are Mac 7, Microsoft, Nvidia, the big boys, the blue chips. These are not just stocks, they're the infrastructure of the modern world. They have moats and they're the safe houses for your capital. We buy these at 10 to 15% dips and we let them compound. Now side B are the rockets. These are 30 to 40% of your portfolio. These are the future kings, small market caps, high growth companies. These are disrupting an industry. This is where 200, 300, 500% gains come from. Now here's the magic happens. If your fortress stocks, the blue chips, the big boys, they grow by 20% and one of your rockets goes up like 300%, your total portfolio explodes. But if a rocket goes to zero, your fortress stocks is what keeps your lifestyle intact. They make sure you never go broke. Here's the biggest mistake retail investors make. They're always 100% invested. They see $1,000 in their account and they feel guilty that it's not in a stock. Professional traders love cash. I'm really 100% in the market. Why? Because the market is emotional. Every few months, the market has a panic attack. Everyone sells, the news says that the world is ending, and the price drops 20% for no fundamental reasons. If you're 100% invested during the crash, you are a victim. If you're 30% in cash during the crash, you are a predator. You're the only person in the room with the bullets to buy the fire sale. Having cash isn't missing out on gains. It's buying an option on a future bargain. We wait for the fat pitch. If the market is too expensive, we do nothing. We get paid to wait. People ask me, why don't you use options or 3x leverage ETFs? You can make 200% in a week. Yeah, I could. And I could lose 100% in a day. Leverage is like driving a car with a sword pointed at your head. If you hit a tiny bump in the road, you die. My priority is capital preservation. In straight stock trading, the only way you lose everything is if the company goes to zero. If you own Microsoft and it drops 5% today, you will still own the same number of shares. You haven't lost anything unless you sell. When you trade with your own money, straight equity, time is on your side. When you trade with leverage, time is your enemy because of data decay, margin interest, fees. These are all taking your money off the top while you are the one taking all the risk. I want to play a game where I can't be forced out of my position. I want to be able to be wrong for 6 months and still win in the end. That's how you get the huge returns. You stay in the trade long enough for the thesis to play out. So you have your fortress stocks, the Googles, the Apples, but how do you find a stock that actually provides the huge returns, the rocket fuel? I don't use stock screeners that look for technical patterns. I look for business realities. I have multiple filters, but first, every stock has to go through these 5-point filters. If the company doesn't hit all 5, I don't care how cool the chart looks, I'm not buying it. The first one is the company solving a problem so painful that the customer would pay almost anything to fix it? I'm looking for painkillers, not vitamins. An example of that was Nvidia. The second one is when I look for market bias. If the market is addicted to that brand or stock. If it's just a nice to have software, I'm out. The third one is the founder-led factor. I want to see a founder who still has skin in the game. I don't want a professional CEO who's just there to collect a paycheck and please the board. I want the guy who treats the company like his own child. When the founder owns 10, 20, 30% of the stock, he's trading with me, not against me. Number 4 is the operating leverage. I look for companies where it costs them $1 to acquire a customer, but that customer stays for 10 years and spends $10,000. If their revenue can grow by 100-fold with their cost only growing by 10%, that's a money printing machine. That's how you get the 5x stock. And number 5 is the micro cap entry. You cannot get a huge return on a company that is already worth $3 trillion as easily as you can on a company worth $500 million. I look for those hidden gems in the mid to small cap range that have the potential to become the next Max 7. Now here's the simple and free way I use to find stocks with potential to outperform. There's a website called Seeking Alpha. Go into it. There's a lot of analysts in that website posting articles about pretty much every stock in existence. You comb through the website, you find compelling stocks, you go into the stock details, and you read all the articles, the good ones and the bad ones, and then you make an informed decision. I personally also like to look at the comments in those articles to see where the retail investors are leaning and if the stock has a huge retail bias towards them. Now, most people know how to buy, but almost nobody knows how to sell. Even me, I sometimes held a stock too long because I had FOMO. They either sell too early because they're scared, or they hold to zero because they're married to the stock. I have 2 rules for selling. That's it. Rule 1, the thesis break. I write down why I bought a certain stock. I bought the company X because they're the only ones with that patent, for example. The moment that patent is challenged or they lose that edge, I sell. I don't care if I'm down 20% or 50%. The reason is gone, so the money's gone. Rule number 2 is the rebalance. If one of my rockets goes up 100%, meaning I double my money, I sell exactly half. I take out my original investment off the table and move it back to one of the fortress stocks or into cash. Now I own the rest of the stock for free. It can go to zero tomorrow and I haven't lost a dime. It can go to the moon and I'm still on the ride. That's how you sleep at night. Now people ask, how much time does it really take? If you're doing it right, almost none. I spend maybe like 5 to 10 hours a month on this whole thing. Here's the routine. There's the monthly check-in. I look at my fortress, I look at my rockets. If the rockets have grown too much, I trim. If they've shrunk, I look to see if it's a buying opportunity. And then number 2 is the rocket audit. That's pretty cool. I just came up with it right now. I check my cash. Am I at 30%? If the market is at an all-time high, I might move to 40% cash. If the market is crashing, I might be buying more, so I'm at 5% cash because I spend it all buying the dip. And number 3 is the earnings scan. I don't watch daily price action. I read the quarterly earning transcripts. I want to hear what the CEO is saying, not the analyst on CNBC. If the business is healthy, I stay. If the business is sick, I leave. Now, the reason I don't use leverage, the reason I don't day trade, and the reason I don't use options isn't because I'm scared. It's because I'm impatient for wealth, but patient for the results. A gambler wants to win tonight so he can feel like a big man. An investor wants to win over the next decade so he can be a free man. If you can stop looking at your P&L every 5 minutes and start looking at your life in 5-year blocks, you've already won. The hundreds of % of returns are just a side effect of you finally growing up and treating your money with respect.